Hello, Nick Vandekar, selling the main line with Long & Foster Real Estate. Today I am meeting up with a member of my team, Shawn, DeAngelo of Prosperity Home Mortgage, and we are addressing one of the questions which many people have about mortgage and buying a home. What are the typical costs associated with a mortgage and how are they paid?
Well, if we're talking about closing costs outside of down payment, the bulk of them are paid at closing, but just to kind of run through them quickly, you can start with us, the lender. Lender fees, that would be things like our origination fee, which goes towards paying all the folks that help process and underwrite your loan. There's also a credit report, and these are all still considered lender fees. Credit report, appraisal, flood cert from FEMA, tax cert from the IRS. There's a couple more ticky-tacky ones in there, but there's lender fees. Another third-party item would be title. The big items on title would be your lender's title insurance, owner's title insurance, and then they have some administration and recording fees as well. Next up, you would have the state transfer tax. So for example, we're in Pennsylvania here now. Transfer tax is normally split 50-50 with the seller, and in most areas it's 2%, a little over 2%, and you're splitting that with the seller. You would also have property taxes and home insurance. Home insurance you're paying for a full year at settlement. There's also a 2 to 3 month buffer that goes into an escrow account. For property taxes, it's split with property taxes. You're reimbursing the seller for what they already paid for that tax cycle, plus finishing up the rest of that tax cycle so that you basically have about a year's worth in there. Same thing with property taxes as with home insurance though, you're putting a little bit of a buffer in there because they will eventually go up. If you're buying into an association, so let's say that's a condominium project or say a townhome community, they can have what's known as a capital contribution. That is going to be dictated by that homeowners association. That's also paid at settlement. And remember, all of those are closing costs paid at closing, but there are other fees that are associated with a mortgage that would be paid before closing. The two that aren't necessarily, well, appraisal's on everyone. So appraisal's paid before settlement because you have to pay the appraiser to go out there. And if you do end up purchasing into a condominium project, oftentimes you have to pay for their, we call them condo docs. It's like their resale certificate, and they have some other administrative documents that we collect as well.